drawn from the Independent Office of Evaluation of IFAD's Evaluation Synthesis on Inclusive Financial Services for the Rural Poor. The webinar will lay the foundations for an exchange of experiences on lessons and challenges related to the effective support of inclusive rural finance. Before going any further, I would like to welcome our guests and presenters. Johanna Pennarz, IOE Lead Evaluation Officer, by my side. Martina Wiedmaier Pfister, IOE Consultant, who has supported us ably on this exercise. And Hamp, Lead Regional Technical Specialist, Rural Finance, Markets and Value Chains, who is connected with us, I guess, from Delhi, and who will contribute to our debate today. Let me begin by raising a question. Why is rural finance important? The majority of people that live in rural areas do not have reliable and secure ways to save money, build assets, or transfer funds. This is particularly true for vulnerable groups such as women and youth. Basic financial services still reach only 10% of rural communities. Weak infrastructure, limited capacity of financial services providers, and low levels of education are the root of these complex problems. Access to financial services is essential to lift people out of poverty. It allows them to seize economic opportunities and increase their welfare. IFAD recognizes the vast potential of rural finance to improve the livelihoods of rural people. This is in fact an important component of the inclusive rural transformation agenda of IFAD's portfolio. Since 1981, IFAD has invested $3.4 billion in rural finance, and which amounts to 17.7% of its total project investments. It has also provided grants on rural finance services activities worth more than $42 million. The Evaluation Synthesis report presents experiences and results from IFAD's support of inclusive financial services. It reviews evaluations undertaken between 2008 and 2017, and draws lessons from other international financial institutions as well. I hope that our speakers today can lead us more deeply into the lessons and challenges related to the effective support of inclusive rural finance. I will now give the floor to Johanna Pennarz, IOE Lead Evaluation Officer, who will provide a more thorough overview of the main findings, conclusions, and recommendations of this synthesis report. Thank you.
Thank you very much, Oscar, for the introduction. The format of this seminar will be that I lead you through the main findings and conclusions and recommendations. And Martina Wiedmaier Pfister, our consultant on this important synthesis, she will add, come in at certain points and include some additional explanation. So together we will do this presentation. This will be followed then by a short note by Hamp, who is based in Delhi, and then we'll have the opportunity for all of you to ask questions or also make some contributions. So I start my presentation now. First of all, this was an evaluation synthesis, which means it's a synthesis of existing evaluative findings and analysis. So the synthesis reviewed the relevance of IFAD's policies, guidance and knowledge on inclusive rural finance, and it reviewed the relevance, effectiveness, sustainability and impact of inclusive rural finance models. So we looked both at the existing documentation on rural finance within IFAD, and we looked at specific projects and project experiences and examples. The scope of this evaluation covered all evaluation covered since 2008. 2008, that date was chosen because we had a corporate level in evaluation in 2017, and that was followed by a revised rural finance policy in 2009. So that's why we looked at all the policies and guidance notes adopted since 2008. There were two aspects which were particularly interesting in this new rural finance policy, and Martina will say more about it in a moment. First, it encouraged interventions at all levels of the financial system. So it included macro, meso, and micro levels. And second, it encouraged projects to use diverse instruments, products, and services, so beyond credit and savings. And we will see on to what extent this has been put into practice. The methodology, let me just say something on the methodology of this synthesis for those who are not familiar. As an evaluation synthesis, it was only a desk review, drawing from our independent evaluation findings. So the systematic review covered a sample of 24 country program evaluation and a sample of 25 project evaluations. In addition, we looked at the policy guidance and knowledge documents prepared by IFAD during that period. We also looked at project approvals and databases, so projects which were still ongoing and have been approved during that period. And in addition, we have collected feedback from practitioners through an online survey. And finally, we also reviewed evaluation and studies conducted by other institutional finance institutions. So now, the first, I would like you to give you an overview of the IFAD portfolio. Our director already explained a little bit of it. Altogether, IFAD has spent 3.4 billion US dollars on rural finance related investments. That's approximately 17% of IFAD's total project investments. If you look at the timeline of investments, you see that over the whole period since 1997, there was approximately 120 million of newly approved projects every year. Altogether, it's about 48% of all projects that have rural finance in it. But we also saw, and this is the red line you see decreasing over the time, we see the number of full rural finance projects have quite gone down. So we have an equal amount of rural finance going into IFAD's operations, but the number of specialized rural finance projects has decreased, which means that most of the money goes into what we call mixed projects, who have a range of interventions, including rural finance. Now, Martina, would you want to say something about the rural finance policy?
Yes, thank you, Johanna, for handing over. The rural finance, the revised rural finance policy, actually it's a follow-up rural finance policy from the first one of 2000. That one of 2009 is a comprehensive document and provides the strategic backbone of all rural finance engagements of IFAD of the reviewed period. It is a key element of this policy is the holistic financial systems development approach, which calls for support at all levels. That means at the micro level, demand side issues and FSPs, at the meso level, infrastructure in the sector such as APEXs or funds, and at the macro level, enabling environment with dialogue, adequate policy, regulation and supervision. This approach is an internationally recognized good practice and highly relevant. However, in the context of IFAD, where it operates, this is sometimes challenging, for example, when local capacities are not available in the sector that can be used or upgraded. The 6 guiding principles of the policy were applied even before 2009, and when the policy was revised, they are still key principles highly valid until today. However, we found that there is a gap between ambition and reality. Some principles were found to be overambitious and in the context of IFAD operations challenging. For example, striving for a variety of financial services or developing demand-driven and innovative approaches. This may not be easy when government partners are not interested in testing new financial services or when local partners to implement them are not there. Aiming at sustainability of financial services while ensuring poverty outreach was also found to be a conflicting goal in many cases. Market-based approaches and avoiding distortions is generally key for sustainable financial service provision. However, cost-covering interest rates can be difficult for the poorest and are not always accepted in government-led projects. The concept of cost-covering interest rates for agriculture investment can be difficult to convey to policymakers and to be realized in practice. Further challenges were distortions in the financial markets through subsidized loans or grant funding from the government. And similarly, long-term strategies, sustainability, poverty outreach were explicit aims of most projects. However, these goals often create a tension between outreach and sustainability. For example, the sustainability of the retail FSPs cannot be secured because IFAD support is ending, or investments in apex organizations require a longer-term approach and significant amounts of funding, or the targeting of a large number of poor people is conflicting with the sustainability of the FSP, who is supposed to charge cost-covering interest rates. Next slide, please. I'm not sure I can move it. Can somebody move the slide? Yeah, thank you. On learning partnerships, IFAD has partnered with a great variety of global and regional actors, a highly valid choice in all cases. These are experienced and well-established partners and networks who are having a strategic role in rural finance outreach strategies and innovations, such as the think tanks CGAP and CAPFIN network, the regional associations Africa and APRACA, or thematic lead agencies like the Microinsurance Center, the Mix platform, or Fundación Capital, who is working with graduation strategies. All of these partnerships generated crucial knowledge and facilitated learning within IFAD through pilots and the subsequent documentation of the results, which allowed IFAD to scale up these pilots and country programs. Pilots, lessons from pilots, and knowledge documents supported the introduction of innovative concepts and approaches. For example, recently, more projects are accommodating insurance and graduation approaches. So these partnerships are largely dependent on grants, and they contribute to an eclectic range of knowledge documents in IFAD, with the caveat that the financing of knowledge products is tied to the partnership and will cease once the partnership ends, leading also to the end of the knowledge development process on that particular subject. Johanna, I'm handing over to you again.
Thank you, Martina. So I want to say something about IFAD's own capacities. As you may gather from the previous slides, rural finance is quite a highly complex and highly specialized topic. So IFAD had established quite strong technical capacities at headquarters. We had what we called a rural finance team within the former policy and technical advisory division. So the main responsibilities of this team included managing global grants. IFAD had quite a number of global grants for knowledge and sharing and for piloting innovative approaches. It managed the engagement in international fora or forums, and it had a role in quality enhancement. It means all new project designs were reviewed and commented on by that team. So these functions were quite important in facilitating a consistent implementation of the rural finance policy. In addition, they conducted a number prepared a number of guidance notes, and they conducted altogether since 2008 23 rural finance thematic workshops, events, and training courses. So a lot of capacity building has been done in-house. But still, we found that's all quite a lot, but it wasn't enough because of the spread of our operations, of the need also to include more local knowledge. The CPMs still strongly rely on independent consultants for project design and supervision. An issue which occurred now in IFAD is that this rural finance team has been decentralized, has been sent to the various new hubs, like Michael is now in Delhi. He used to be in Rome until last year. And Jonathan, I don't know if we have him here. He's now somewhere in West Africa, and so we are spread out over the regions. So at the moment, we're lacking a strong technical center here at headquarters. Okay, I would like to say some comments on how this reflects on all of what we said on the financial instruments used on the grounds. We looked at all the projects that have been approved since 2008. And what we saw that the mix of financial instruments remains by and large very traditional. We have the most common financial instrument used now is matching grants. followed by line of credit and loan guarantee funds. So line of credit, many of you will know, is a traditional, very traditional way. It's preferred way of delivering rural finance in many countries. Matching grants now have bypassed this line of credits as the most popular instrument, but we found in many cases we did not find it being used in accordance with the guidance. So matching grants are meant to be a temporary supplement of, at the time when there is no rural finance or no credit available for investors, producers. So they are basically a one-off investments to bridge a gap, a financing gap, until banks will be able to put money into a certain type of production. But often they are used to kick off activities at the project start, to subsidize activities and so on. And Martina may be able to say more about it later. So what we find altogether is that the mix of instruments remains traditional, that more diverse instruments are not quite used yet, and innovative instruments seem to be more focused in the Asian Pacific region. So if we look at the sample of evaluations, which we reviewed in further depth, I would like to share with you some of the results and observations which we have. Altogether, it was a sample of 25 projects that included inclusive financial services. We found that 13 of these projects, they responded well to the overall opportunities and challenges within the national policy framework. But most of them did not explicitly address financial sector policy issues. So they were more set into the poverty reduction agenda, but not necessarily on financial sector policies at design. The national financial inclusion strategies were only partly reflected. They're becoming more important recently. So in most of the projects which we looked at, they haven't been considered during design. The changing framework conditions are very challenging, and we found it in particular the economic recession, inflation, or financial crisis, in particular in Latin America. That was quite a big setback for many of our rural finance projects there. An issue as well at design was the lack of a realistic assessment of beneficiary capacity and demand for financial services. Yeah, and we found in general the demand for innovative products and services was insufficiently addressed. For example, we had some cases where new models like agriculture leasing were introduced, but then the market wasn't fully assessed and the whole thing did not take off really. Within the sample, we looked at the results that have been achieved, and both for the mixed projects and those projects which have had rural financing, had more than rural finance. So these three types of projects, we looked at the full rural finance projects, those which had a dedicated component, and those which were mixed in their nature, had various activities and included some rural finance. And what we see, not surprisingly, is that the best results were achieved by those that had a lot of rural financing. So they had good outcomes and outputs. Outputs were also achieved by those with a dedicated component, but those mixed projects really did not deliver the good results which we had expected. If we go look then at the effectiveness of the financial instruments that these projects had used, what we can see here very clearly that we had better those projects that had used value chain financing and IPEX, for example, they had been generally better, while on the other hand, the projects that had used matching grants and loan guarantees funds, we did not have good results at all. So, I mean, this is still, I must say, with limitations. It has been a very small sample, but I think it's just to summarize the experience which we have with these various instruments. Value chain financing, we found, has not been systematically addressed. So we had financing of value chain activities here and there with various means, but there was no systematic approach to value chain financing. Yeah, and APEX bodies, you see, there are still, there's a bit of a mixed story there, because we had good experiences with APEX funds and APEX bodies where they have been existing and working for some time, but where IFAD tried to set them up new, we did not have good results at all. And loan guarantee funds, and Martina will say more about this, they had a challenge on their own because they're quite difficult to establish. Okay, right. Yes. The different financial service providers we found in good and bad projects. So generally, we found that the microfinance organizations and the NGOs, they were present in the better projects. We had, for all others, we had more of a mixed experience, and we had negative experience, for example, with state banks and credit unions. Both weren't very successful. Commercial banks were also more unsuccessful, and as they are successful. So it is a very mixed picture we see here. Generally, we would say that IFAD's experience of working with, the traditional experience of working with MFIs and NGOs has been more successful than others. And commercial banks, for example, they often had the problem they weren't present in the areas where IFAD is targeting, and they had very poor outreach to remote and farmers. Okay, I come to the main influencing factors. So the main factors which we identified as influencing these results. As negative factors, we found the limited analysis of the institutional and political context. So that wasn't properly understood in a number of projects. We found that a favorable policy environment was only noted in 4 projects, was Armenia, China, Uruguay, and India. And India would be interesting to hear from Michael more about it. An appropriate rural finance strategy was very important, was noted in 11 projects, which means these are projects which had the funding modality, had got the funding modality right, and the choice of financial service providers was right, and partners. Inappropriate strategies, on the other hand, they had often insufficient funding altogether. I mean, the funding, just the amount of fund and the availability of funding seems to be a big issue, and the choice of financial products didn't quite meet the demand. The capacity issues were running all through our samples. That included weak government capacity to manage the rural finance projects, and in particular, a lack of meso-level institutions. So in many cases, IFAD has worked with a lot of micro-level institutions, NGOs, community-based organizations, but there was a kind of common body bringing them together and delivering service effectively that was often missing. And then, of course, we had, last not but least, the limited institutional and staff capacity of the financial service provider. So capacity issue is really the big issue which we identified in the synthesis, and literally at all levels, from the top to the bottom. A word on gender. As you may know, gender is very important. Gender equality is very important for IFAD. So we look specifically at gender results in our sample. We had positive, strong gender results only in 7 projects, but we had a large number of projects where we had no or negative gender results, which is an important message for IFAD as well. I mean, that often has to do that, as I said, the choice of the financial service providers, they were not sufficiently specialized on women. We had a problem, of course, with the capacities on the ground of women, being able to access any services provided. And we found that generally financial service providers that had specialized, had only women clientele, like women's credit funds or women's groups, they had better results. If you look across the various providers, you will see that the projects that had used the community-based organization, they had the best gender results. And projects that have used apex bodies as well. And last but not least, and that's a bit surprising for us, the projects that had used state banks, because state banks in some cases, they are mandated to look after certain clientele, like women. So that these projects actually delivered quite well. On the other hand, credit unions and commercial banks did not do as well in the outreach of women. So Martina, now, micro MSMEs enterprises.
Well, the outreach to micro, small and medium enterprises was a separate topic we looked at, because it was present in many of the sample projects. So finding the right instrument to fund MSMEs seems to be challenging. For example, when public funds are often less effective as it takes time to set them up, or they may struggle with organizational issues that cannot be dealt with in the project. Or loan guarantee funds are either not established in the country or are often weak organizations. Setting up loan guarantee funds often requires more technical support than IFAD can provide. Or partnering with qualified FSPs can also be challenging when a capable FSP is not available in the project region. The link between finance and business development services was often not effective. Apparently, the two components, let's say, or the two strategies are often designed as parallel work streams, but not implemented in an integrated way later. One reason was that timelines in finance and technical support follow a different logic. Many projects reported they have the technical side in place, but finance was delayed. Often the two approaches were conceptually linked, but could not be made compatible in practice. Matching grants as financial inputs are very common, as Johanna presented, to finance a broad array of assets for diverse target groups. They are indeed a simple instrument. However, often they are not properly applied as one of support within a longer-term financing strategy. That means the use of matching grants lacks often a clear plan how to phase out the grant and, for example, link the enterprise to a formal financial service provider to accumulate own capital for the enterprise or access a loan, thereby securing long-term access to finance. Such guidance is available. However, practice is often different. In the end, matching grants distort a sound financial systems development approach as set out in the policy, focusing on long-term access to finance, which would be the goal. Value chain financing was found to be still at an initial stage and is not systematically applied. Among the challenges are, for example, that the diverse segments in the value chain are not clearly identified and separately addressed. Many projects do mention to work in value chains, but rely on microfinance. Value chain finance, however, is a more complex approach, and some guidance is available, but broad application is yet to be advanced. Next slide, please. On sustainability, this is a very important principle of the rural finance policy. So the shift towards sustainability-focused approaches can be observed in many projects, documents, and in expert fora. It is generally accepted as a principle, the state of the art within IFAD and among its partners. So projects may apply many strategies towards sustainability of the services they are setting up or helping to set up. For example, they support apex organizations who then help retail finance service providers to become sustainable or merge. They support MFIs to lower their costs and become sustainable, or diversify the services and products of the MFIs. However, for both apexes and retail FSPs, institutional sustainability requires often time and considerable support, which may often be out of reach for an IFAD project that has to deliver for its target beneficiaries within a certain time frame. And also we have seen, as Johanna presented, that the limited analysis of the context and of the realistic assessment of the capacity of perhaps existing apexes or of the time that it needs to build up an apex was deficient. Many projects in the end face a tension with the poor client focus they are expected to target. Hence, they may seek to subsidize loans to ensure outreach to the poorer. However, loans may be part of the project design, but not the best option for this segment. Effective pro-poor approaches may require a different approach in some cases, for example, graduation. Simple approaches may work better in some situations. For example, for the poorer and women, community-based financial services can be implemented in a shorter time frame and with participation, rather than setting up a branch network of a MFI in a remoter region. In fact, matching grants, as we have heard, are a simple instrument, but they should be dealt really with caution. Johanna, back to you.
Yeah. Go.
Okay, thank you. Right, I would like to comment now. Next slide, please. Yes. On the use of multi-level approaches. As we mentioned in the beginning, the holistic financial sector development, that was an important part of the rural finance policy in 2009. So projects are expected to work at at all levels of the financial system. In fact, I mean, that's what we also found, that there was a clear shift, that projects are working on micro and meso levels, but there was still a small number working at micro level only. 5 projects we had in our sample, and 13 projects working on both on micro and meso level, and 5 projects worked on all 3 levels. So the important point here is that we had projects that worked with existing meso-level organizations. They had better impacts, as I will show in the next slide. So we looked at the impacts achieved by the different types of projects, 1 level, 2 level, and 3 level projects. And what you can see here is projects that have worked on the meso level. They in fact had better impacts at all across the board on target group and on institutions. But then the impact on sector and impact on policy was better by those projects, not surprisingly, that also worked at the macro level. Yeah. So there is clearly, I mean, we see a clear benefit of having this financial sector approach, although it may not be easy to implement, as we will explain in a moment. Okay, then I told you we did a survey, and we got a large number among rural finance practitioners, and we got a large number on very good responses. And I would like to share some of the feedback they gave to IFAD, so what IFAD should do more and what IFAD should do less. So they should do more, promote savings and insurance, value chain financing. Interesting point was about these performance-based agreements with financial service providers and meso-level organizations. They also suggested that IFAD should do more to leverage financial aggregators. Then some of the traditional MFIs and cooperatives and so on. Interesting is also the last point is partnerships with global and regional networks are very important. IFAD has to do more about it. Very interesting is also to see what should IFAD do less. And here I would like to highlight in particular what our independent feedback group said is less matching grants, less blended finance, and less credit funds for specific groups. Yeah, and they should IFAD should refrain from establishing standalone MFIs or financial services providers and getting government to run funds. It's a mistake often made in the older projects. Yeah, so I think these are quite some useful feedback, and I would like to take this opportunity again to thank you who have responded to our survey and provided some suggestions. Martina, would you?
Financial sector development approach as effective it can be, but it can effectively only work in standalone rural finance projects. That's what comes out from the sample. This approach focuses on the financial sector, and it is much more difficult to implement for rural finance components that are designed for a targeted region, a specific group of beneficiaries, or selected value chains. So for most IFAD projects with a rural finance component, working at the 3 levels of the financial system cannot be easily implemented. In fact, generally, simple approaches work better for IFAD. We have heard that, like the graduation approach or community-based financial services, like working with NGO MFIs or savings and loans groups. These types of financial service providers are generally more open to serving the poorer among IFAD target groups, and they are often the only FSP operating in the rural and remote areas where IFAD is active in. Another lesson on the institutional sustainability. This requires diverse products and services and, importantly, charging cost-covering interest rates. The tension which projects often face between targeting the poorer while at the same time seeking to support the sustainability of the FSP is an unresolved issue in many cases. On apex organizations, they can work well where they are effectively set up and helping to fund and provide services to FSP. So they are an important component for reducing the cost of financial services provision and for the sustainability of retail financial service providers. However, when a project helps to build an APEC structure, it will take a long time to perform and may need continued support. Notably, in the case where a micro-level institution assumes a meso-level function, such as an on-lending by a commercial bank to MFIs, there needs to be a clear exit strategy to ensure that the funds remain available in the sector in the long term. Credit lines may be still required and are effective in markets where liquidity is a key constraint, which is not the situation in many countries nowadays, and where professional fund managers can be found. Credit lines are still overly represented in the mix of financial instruments. And loan guarantee funds, they require really a high level of technical capacity, funding, and a long-term perspective. They can indeed push lending, overcoming collateral bottlenecks. However, generally they are difficult to implement as they require more technical and financial input than IFAD can often provide on its own, perhaps in a local partnership. Next slide, please. On value chain finance, this requires differentiated approaches to serve all of the segments in the value chain in a way that addresses the individual needs of that segment and use the mix of financial services accordingly. And at the moment, as Johanna said, no systematically applied approach was identified to value chain financing. MFI, NGOs, and CBOFOs, we have heard that, are generally more poverty-oriented than commercial banks, and they are often the ones present in the region and may also be less costly to support. Graduation targets the very poor, supports income-generating activities and builds assets that helps people to move out of extreme poverty, and then create the conditions to access financial services at a later stage. Innovative aggregators such as postal networks or nowadays mobile operators have the potential to support outreach to remote rural areas. They are established and may have a lower cost structure than bringing traditional financial service providers to rural areas. And just to repeat, sustainability of FSPs in rural areas requires long-term support and permanent APIC structures. Issues which need to be considered during design, realistically assessing the required input. And we have heard that a realistic assessment during design was a weakness in quite some cases. And finally, the engagement in financial sector policy dialogue or financial sector enabling environment requires broader partnerships and also qualified staff to deal with the often highly technical and sensitive issues on the ground. IFAD alone is hardly in a position to deal with issues in the enabling environment. So partnering with other development agencies, for example, in the framework of a national financial inclusion strategy, can be a solution. Back to you, Johanna.
Okay, thank you very much. I'm coming to the conclusions and recommendations now. So there's a lot of issues we have covered. Conclusions are 5. First, the aspirations in the rural finance policy, strategy and guidance have been rising a lot since 2009. You see, Martina commented extensively on the principles and the approaches which have become increasingly complex and demanding. And the important issue is that they have to be matched with adequate technical capacities also within IFAD. And we have explained that we have concerns that at the moment the IFAD, in particular at headquarter level, is not sufficiently set up to deal with those challenges. We also have an issue with IFAD's business model, which is loan-based, and to address the demand from government. And there we have often a very limited demand for products. So that's why we see credit lines still being very popular in all our projects. And innovative and diverse financial services are not commonly used for that particular specific reasons, among others. but also because of the limited capacities available. So we found that the financial service providers' capacities is the major constraint, which needs to be addressed at the meso level. Coming to the recommendations to IFAD, we have 5 recommendations. First, we recommend that IFAD should conduct a stocktake of current IFS practices on the ground, because there's a lot has been happening, and it has never been properly reviewed. For example, we mentioned the number of cases where matching grants have been used, but there has been no comprehensive review and looking at what actually works on the ground and what doesn't work and what is in line with guidance and good practice and what isn't. The second recommendation is that IFAD rural finance policy is still very relevant, but it needs to be updated because the global context has changed a lot in the last 10 years. And in addition to this, we recommend that IFAD should prepare a corporate strategy, a strategic document at corporate level which explains how this policy will be put into practice and how the challenges mentioned by the synthesis will be addressed. The third recommendation is that in order to enhance the strategic impact at institutional, sector and policy level, IFAD will have to pay greater attention and greater focus on meso-level institutions and has to build stronger partnerships with agencies working in the financial sector, because it's only limited what IFAD can do on its own. The fourth recommendation is that, and that applies for all new projects like the fifth one, the last one as well, make sure that we conduct a sound analysis at the design stage and that we are still flexible to adapt during implementation, because a lot of the problems that rural finance projects have been facing have been built in at the design. And number 5 recommendation is you should continue experimenting with innovative approaches and service within your local context, the local and regional context. Obviously, we have seen that in the beginning. In the first slide, the context is very different in Asia than it is Latin America or in Africa, and all requires adapted approaches. So that's something that should be encouraged by IFAD, while at the same time cross-regional learning will continue. So these were the recommendation and the basic points raised by us. Thank you very much. Okay, thank you very much. I see there are some questions coming up already, but we would want to give 5 minutes to Michael now to respond to the many.
Well, good afternoon, Oscar, Renate, Johanna, and Martina. Can you hear me? Hello?
Yes.
Can you hear me? Okay,
yes.
Good. Then it's fine. Just a question, do you want me to be on video as well? Would be great. Let's see how that it works.
It would be great, yes, thank you.
Can you see me? No. It used to work, but I don't know. Can you see me now? Okay, then let's move on.
No, but if
I don't know.
This is a problem. We hear you very clearly.
I don't know why or where the difficulties aren't right now. So I hope I have a little bit more than 5 minutes only. Not because I need to respond so much to your findings and the conclusions and the recommendations. Actually, I can only respond very much in the affirmative with the overall diagnostics and on the way forward. But we come to that. Let me start with repeating what I've said in my recent podcast on the same topic. This evaluation synthesis really comes at the perfect right time. And let me also take the opportunity in public to thank the IOE team for an excellent job done. I think it's also the right time to share with you a bit more of the historic background of the evaluation synthesis. So my first task when I joined IFAD in November 2007 was to revise its corporate rural finance policy of 2000. The conclusions of 5 regional corporate level evaluations in 2006 of the rural finance policy and operations were very much conforming that the regional portfolios were suffering from poor rural finance project design, and the rural finance policy had not been incorporated to a large extent as a tool to design. I see some similarities with the current situation. That's why I think it's worth mentioning it. So the gap between the rural finance policy and the regional realities was identified as one reason for limited effectiveness of policy guidance. The recommendations and agreed actions at completion had helped us to develop the new rural finance policy, which was endorsed by the board in April 2009, followed by the new operational guidelines known as the Decision Tools for Rural Finance in 2010. Both documents have benefited of learning from other development partner organizations and international good practices as provided by the consensus guidelines for funders by the consultative group to assist the poor SIGAP. Together with the dissemination of the decision tools, we, and here I'm referring to the Rural Finance Thematic Group, a group of about 20 colleagues at that time from across the organization, from all departments and different divisions who were interested in the subject. They conducted an organization-wide survey to identify priority topics for more comprehensive guidance and learning. The key topics, and it shouldn't come as a surprise to us, were lines of credit, loan guarantee funds, community-based financial organizations, and monitoring and evaluation key performance indicators. Based on that outcome, the former PTA conducted a series of in-house learning events, and you made reference to that in your report. And these topics, and the topics were facilitated by experts from a number of strategic partner organizations, so not only by our in-house capacities. In 2012, we were ready to sign a contract with a vendor for an e-learning program for IFAD staff, but also for expert consultants in the field. I mean, you have mentioned clearly how many consultants are actually doing the actual operational work in the field, particularly during design and supervisions. At the end of that competitive process that the Frankfurt School of Management and Finance had won, we were stopped to go ahead at this point as it was seen too costly and as a non-priority task of PTA. Instead, we had come up with a new standard format of toolkits. Until May 2018, we have developed 8 toolkits, including how to do notes and lessons learning notes, and many more knowledge products and specific subjects, from how to scale up inclusive rural financial services, and 2 technical notes on the prominent issue, as it has come up in your report, matching grants to the more sophisticated, more remote sensing technology applications for weather insurance, remittances and payment systems, and agricultural risk management. The question is now, have these efforts affected project quality, the effectiveness and adherence to the rural finance policy and operational guidance? The evaluation synthesis has come now exactly 10 years after the endorsement of the rural finance policy. And as we have just learned from Johanna's and Martina's presentation, the evaluation synthesis confirms that the rural finance policy is still relevant and robust in providing strategic clarity. And I would like to add that IFAD has remained a leading development agency in rural microfinance up to now. This is being confirmed by the SIGAP Global Financial Inclusion Funder Survey conducted in partnership with MIX year after year until 2018. At the same time, it is needed to reflect IFAD's performance, A, vis-à-vis the global trend of market systems approach to financial inclusion, other than using access to finance just as an instrument to achieve a certain development objective. We have just learned about the increasing prominence of matching grants as an instrument included in many designs and project implementation manuals as a kind of, I call it, default solution for many problems. And B, vis-à-vis the continued evaluation of financial inclusion and the enormous progress made in the field of financial system development, almost everywhere in the world. Dozens of national governments have adopted policies to expand financial inclusion, and together with other global and national efforts, they were paying off according to the World Bank's Global Findex data. The progress made in financial inclusion has been driven also a digital technology and a new generation of financial services accessed through mobile and smartphones and the internet. The question should then be allowed to what extent IFAD can be part of this development and drive the innovation path to financial inclusion in the rural context and for smallholder farmer households and rural women and rural youth. It is good to see that the evaluation synthesis report acknowledged the work of the IFAD team and rural finance experts. Its global reputation and almost unique market selling point attributed to significant improvements in its internal systems over the time period evaluated. IFAD's exclusive rural focus means it is uniquely positioned to help 75% of the world's 900 million people in extreme poverty living in rural areas. With close to 15% of its overall portfolio in rural finance, IFAD is the 5th largest microfinance funder according to the SIGAP funder surveys as referred to earlier. However, besides its strategic clarity and knowledge management through comprehensive operational guidelines, toolkits, and technical notes, which also include state-of-the-art themes like digital financial services for smallholder households, published in 2016, remote sensing for index insurance, published in 2017, etc. There are obviously deficiencies in IFAD's in-country operations, as the evaluation synthesis report has clearly laid it out. The new decentralized structure, now I'm coming to the point also I was happy to see in the report, the new decentralized structure with specialists based in sub-regional field offices provides a new challenge. The rural finance thematic group mentioned earlier is dysfunctional. I may quote the evaluation synthesis report at this point. Dismantling the rural finance team has left a vacuum in the terms of technical expertise and capacity at headquarters. It is unclear if and how IFAD's engagement in the various global networks can be maintained at the same level of technical input and as visibility as in the past. I also believe, quote end, I also believe that enabling technological innovations and more diversified financial services in IFAD co-funded inclusive rural finance project components are lagging behind the global trends. Furthermore, the related recommendation by the evaluation synthesis to conduct a stocktake of prevailing practice in the field should be welcome. The results will inform IFAD management and partner governments about the potential of investing more in rural finance support infrastructure, this is the meso-level development, and in the next generation policy work. So these conducive frameworks, as you have mentioned, India as a special case, yes, if India, for instance, has this kind of more conducive framework for financial inclusion, I can confirm that. On the other side, we can pin big hopes on the work of the headquarter-based financing facility for remittances, the platform for agricultural risk management, and the incorporated now weather risk management facility. These facilities are managed by dedicated teams who drive the innovation, knowledge, and policy agenda in the rural finance themes of remittances and payment systems, microinsurance and agricultural insurance, as well as risk management. They also serve as vehicles for IFAD to actively engage in the global policy arena and knowledge communities, such as the Global Partnership for Financial Inclusion, G20 and G7, and the Microinsurance Network, etc., etc. As the facilities have secured substantial dedicated funding for the next few years, it is important to keep the momentum in IFAD. This aspect should be supported by the recommended update of the corporate policy. So I agree already that we should update the policy, and perhaps by a new underlying action plan. The evaluation synthesis report diagnostic highlights the key risk areas of staff capacity and quality of delivery of IFAD-funded projects related reputational risk in the thematic area. as IFAD operations rely a lot on external consultants during project design and supervision and implementation support, mentioned earlier, it would need to have powerful guidance and knowledge dissemination mechanisms in place. In terms of knowledge management, particularly knowledge dissemination, the evaluation synthesis report shows mixed results on that. Strategic partnerships, however, are a solid foundation for IFAD's learning and capacity development functions. Of course, a more comprehensive analysis of the strengths and opportunities of these partnerships would have been beyond the scope of the evaluation synthesis. Nevertheless, without strategic partnerships in normative work, knowledge management and dissemination, learning, capacity development and institutional development, IFAD's part in the concept of players in financial inclusion would be marginal. It should be highlighted that IFAD is an active member of the World Bank-based CGAP mentioned before, which is a global think tank in financial inclusion, and the leader of the partnership in capacity building in rural finance known as CAPFIN, with its joint learning portal, the Rural Finance and Investment Learning Center, and the Rural and Agricultural Finance Program, now in its 5th year in collaboration with the Boulder Institute of Microfinance. These are key features for the successful delivery of inclusive rural finance projects and components. Networking and the community of practice are potential pillars for IFAD's workforce besides its small core team and the special facilities. Last but not least, I subscribe to both A, the evaluation synthesis conclusion that IFAD has to act fast to remain at the center of rural development, to continue to inspire and be inspired by others, and B, to its recommendation that IFAD should move in the direction of a strategic change agent and a facilitator of inclusive rural finance system development. I stop here. Thank you very much.
For this very clear, thank you very much for this very clear statement, Michael. We can come to the discussion. I think there are some questions already. You can either write your questions into the chat box down there, or you can even raise your hand. If you look at the top, at the top of the screen, there is a raised hand signal, and you can raise your hand, and then you can actually, we can allow you to speak to all the participants. So please also use this function if you have more than one question to tell us. First of all, there are 2 questions on blended finance, which I would want to pass on to our financial experts, Michael and Martina. So there's a question from Giovanni and a question from Arena, both from FAO, and they ask, what does it mean if I should do less blended finance? What are the issues actually related to blended finance? And the second question is, there have been so many new developments in the sector, so does IFAD actually have the capacity to implement blended finance models?
Since the statement was made by the team,
who would want to answer first, Martina or Michael?
Martina should start first, and then let's see what I can add to this.
So, well, this is a statement which comes from the survey we have conducted and is an opinion. So I think that blended finance is a new approach. Blended finance is about crowding in private capital from international and private local investors to deal with the huge financing gap. And as far as I know, there haven't been so many experiences. So maybe the statement shouldn't be do less blended finance, because this is an approach that is just starting. And IFAD, for example, has partnered in this new ABC fund, and I'm sure, Michael, you will say more about this. So I think it's a new approach, but the question is pertinent. Does IFAD have the capacities to deal with this new approach? Michael, over to you.
Yeah, thank you, Martina. Very well said. Almost a bit anecdotal. At one of the CGAP annual meetings, again CGAP, I'm referring to, we had a working group there on SME finance, and this was and the chair was someone from IFC, And when we reached the point of blended finance, IFC was mentioning blended finance has never ever worked. It is like a buzzword. It is somehow like a hype, and we as IFC, we cannot say that blended finance is really the game changer. So take this to the back burner. A bit of something we should take into consideration before we really engaged entirely into blended finance. But what does it actually mean, blended finance? It's perhaps another form of co-financing, and this is something what we do for a long time already by now. That we engage private sector partners, mainly commercial banks, to co-finance into smallholder agricultural production, processing, trade finance, etc. So SAFIN, the network, which has its secretariat within IFAD and more recently within the Sustainable Production Markets and Institutions division, is doing some groundwork, some more analytical work on blended finance. And the outcome is not yet there. And perhaps it will take a little bit longer before we go into fully operations. Martina was referring to an abbreviation, ABC. This has nothing to do with literature. ABC stands for the Agribusiness Capital Fund. This is IFAD's new financial sector or impact investment fund to make smallholder inclusive value chain finance happening through direct investments into the private sector. So this is, of course, it is one way of blended finance. And I see for these kind of impact investment finance, I see a great opportunity in future, or including for IFAD. Over.
Yes, thank you, Michael. Yeah, I think that's precisely also the reason behind it. That I mean, as one shortcoming, which we said, there is very difficult for private sector to access funding, from government if the money goes through government loans. So simply IFAD wants to diversify. I think there's also a study for those interested in blended finance, a new evaluation or a review from OECD on blended finance. Who wants to read more about it? I just see that this topic still attracts some interest. We have a comment here from Hedwig Sievertsen, who says that there is an example of blended finance in the profit program in Kenya. So the IFAD team found it very successful in their latest evaluation. I'm not quite aware of it, but anyway, thank you very much for that comment.
It's gaining momentum,
yes.
And what I have learned, I see now also my colleague Sauli being mentioned here, is good partnership, confirmed official partnership with Barclays Bank, and Barclays Bank has developed new tools in the form of digitalized value chain financing mechanisms, and I would assume Barclays is also using its own resources to make value chain financing happening under the IFAD co-funded profit program in Kenya.
Thank you very much, Michael. I can see from Hedwig that her colleague Sauli wants to talk about it. Sauli, can you please raise your hand on the top panel there? Click on that, and then we can give you permission to speak. You go there in the top. Yes, there. Okay. Hello, Sauli. Hello. Sauli, can you speak? Can you hear?
Yeah, we can hear you, Sauli. We can hear you.
Okay.
Just speak.
Oh, fantastic. So,
yes.
Good afternoon. This is Sauli. I'm talking from Nairobi. Yeah. So indeed, we had a supervision of this profit project just a couple of weeks ago, and we found that
Great, wonderful, Nairobi.
the project had partnered with the Barclays Bank and through the Agriculture Finance Corporation in here in Kenya. It's a local organization that is mandated to support rural finance operations. So what they had done is they had used their own resources, both the Barclays and the AFC. They had used their own resources to finance agribusinesses and value chain finance methodology, and they had financed microfinance institutions and rural circles, the cooperatives in here to target directly the smallholder farmers. So it was quite interesting. And also another interesting point to raise here maybe is because I see in the evaluation report a lot of mentioning that we sort of discourage, where we say that it's a little bit not innovative or not a good, not like the preferred way forward to use a guarantee mechanisms for credit lines or matching grants. But this profit project, however, had used the credit guarantee facility quite effectively in the AFC and in the Barclays Bank, leveraging their own financing. So the leverage ratio was something like, now I forget the number, but about 6 or. Can you hear me or no?
Sorry, we can't hear you very well. You make sure you have connection with your internet to the internet.
They
from where you speak.
Credit guarantee facility. I mean, the profit project had the credit guarantee facility and the credit.
Better now, yeah, please go on.
The guarantee facility was used for the more developed, more proper financial service providers, which were this AFC and the Barclays Bank, while the credit line was used for smaller MFIs or SACCOs that had, actually no SACCOs, that was used for MFIs that had the liquidity issue. And those two were managed quite well in order to raise funding to rural finance or to farmers and agribusiness in the rural areas. Especially the guarantee facility was able to leverage about 7 times or 6 times of the guarantee volume. So that means they had put something like $6 million, if I remember correctly, into the credit guarantee facility divided between the AFC and the Barclays Bank, and they had leveraged about $40 million for investments. So in that case, I would think that it was quite good, and the expectation is that it continues to leverage financing in the future. Yeah.
Okay, thank you very much, Sauli. That is very, very interesting and good to hear from Nairobi as well. I can see that in the meantime, Alena has shared the paper on blended finance evaluation, which says actually the same, says, we need to be careful, that's a new approach, and, all the donors jumping onto it, that may not be appropriate. So thank you very much, Alena, from sharing this paper. Alena, did we also address all your questions and on the blended finance, which is very new, we must admit? Okay, good, very good. Thank you, Alena. Okay.
I have another question.
Thank you very much, Oscar.
Yes, thank you very much for the presentations and the exchange. It is extremely useful and interesting. My question is related to the access of inclusive financial services for the youth. As you know, youth, they don't have guarantees, any collateral, barely capacity. Sometimes they do have capacity to design new projects, but they don't have a credit history, and therefore they are very difficult stakeholders to serve, let's say, through financial services. And I don't know if during the conduct of the synthesis report, or even in ongoing projects that may have not been part of the synthesis report, there are good experiences where we can see how IFAD is supporting and reaching out to this important segment of the population. Thank you.
Yes, thank you, Oscar. I can tell you from the evaluations, we haven't found much covered yet. I mean, there is a big problem that we didn't have disaggregated data on youth, and they're usually also not monitored in many of those financial service providers. Perhaps Michael can share some recent experiences in Asia. Do you have any good experiences on outreach to youth through financial services?
If we look at the Asian continent, the demographics in Asia overall, as a general picture, we can say we have overall very young societies. And the question in the room all the time is, when we talk about rural development, agricultural development, who will farm in future? And what can IFAD contribute to make agriculture seen as a career path and as a business opportunity, a livelihood strategy for young people? So these are the driving forces, and you can say almost all governments ask IFAD to do something in terms of involving youth in the projects, in the programs, with our interventions, with the different tools, and access to finance is always something highly in demand. Of course, usually governments here in Asia, they have already their youth entrepreneurship, youth employment support programs. They make use of a lot of money from their fiscal space, sometimes without thinking about the dimensions of the fiscal space. But in general, you can see governments are very generous in providing grants, startup kits, subsidized loans to young entrepreneurs, and I mean also young farmers. So this is the political economy in which we work in Asia a lot. The good examples, one good example, because otherwise I will fill the whole space. The good example comes from Indonesia, where IFAD has recently started a project which is called Youth Entrepreneurship and Employment Support Services Project, abbreviated YES. And we make simply use of government credit schemes which are in place by public finance banks. One very prominent bank, everyone amongst the 26 or so listeners right now or followers of this webinar know what I'm talking about. It's Bank Rakyat Indonesia, BRI. They have these several government subsidized programs. The link which needed to be built, and that's where IFAD now plays the facilitating role, is to make these subsidized programs applicable or accessible for young rural people. And we are doing this in the form that we package the services. We leave the programs, the government programs as they are, but we provide additional services, non-financial services to young entrepreneurs and enhance them and to become eligible for these schemes. So then there is one major obstacle that they say you have to be in business at least for 6 months, or was it 6 or 12 months? I'm not quite sure now. And we come up with kind of a bridging fund for these young people. So again, this is a kind of a matching grant, but of a different nature to bridge this time of professional experience that they have to demonstrate before they become eligible for these government loan schemes. So the next supervision mission will show how successful we are, but I think we will have some positive signs. By the way, we have similar aspects in the new programs in Cambodia, in Bangladesh, actually in India. You can say actually all over the place, youth have taken center stage of IFAD supported programs under rural finance programs or components.
Thank you very much. Thank you very much, Michael. That was really interesting. We have another question from Alena there. from FAO with regards to gender. Yes, gender is promotion is very important for IFAD. But does IFAD face an issue to convince financial service providers to prioritize female customer segments? Yes, definitely it does. I mean, we have seen that in several of our reports. We had a synthesis on gender some years ago, which already noted that actually the rural finance was not as effective in achieving gender equality because of, as it should be, mainly because they work with financial services providers who do not prioritize. Precisely that issue was found out. So, I mean, one recommendation there would be to IFAD to be more selective in the way they look at their financial service providers and prioritize also those which are specialized on female clients, or train those who are mainstream financial service providers accordingly. Martina, would you have some more good practices to share on gender?
Yeah, okay. Well,
Yes,
I don't have... Yeah,
Martina,
okay. I don't have better news that gender is in many other donor agencies also still a lip service and doesn't easily trickle down. That it has partly to do with the lack of training of staff, with a lack of control and monitoring what's really being done with the female customer segment. And also it is in practice really difficult to pick a financial service provider that serves women if you don't have a big choice. So to be realistic on the ground, it's not always that easy to really find the partners who are working with a female customer segment. And in some countries, or in many countries, microfinance is indeed happening with a lot of females, like in India or perhaps less in Indonesia. But I think it's also an issue that is a strategic issue for an organization, that it doesn't only have a gender policy at the top level, but it makes sure all processes at the different levels down to the ground are considering gender, including capacity building of project staff and counterparts. And also having controls in place that measure implementation with the female customer segment.
Yeah, I would fully subscribe to Martina's. Well, actually, I need to subscribe to Martina's statement.
News from Asia.
There are interesting developments. So on the one hand, you see these grassroots self-help group type of savings and credit organizations at community or village level, where women are definitely dominating the field of customers or members in these groups. But interesting enough, now as we are referring to the digitized environment and digital financial services, all of a sudden we see a bigger divide between men and women again. So women, when it comes to the new generation of digitalized financial services, are less empowered or less targeted than men. We see this in countries like the mother house of microfinance, Bangladesh, where we had something like 90% of women in all these thousands of village savings and credit groups. But now, as we are going for e-wallet and mobile phone banking and the like, women are, falling back into classic roles due to lack of digital literacy and the like. So these are areas where we have to look into it. The positive sign is because women are not, they also recognize that they are disconnected from these developments, but they have found other ways. And this is when it comes to e-commerce and social commerce activities. Women are super active. I see it in Bangladesh, but also in other countries, now to use their mobile phones where they so far have used or have been followers of Facebook and Instagram, and they use exactly these social media now to commercialize their trades. They offer their products, they make photos, post it, and they establish business linkages for their produce. So very interesting developments, and I think this is a new challenge, but also a great opportunity for IFAD supported projects to build on these new developments.
Thank you very much. Alena has another question. Do you want to speak, Alena? Perhaps you're typing a lot. Okay, does you want to? Oh, thank you. Okay, very well. Welcome. Thank you, Alena. Okay, do we have any more questions from our online visitors? I can't see any at the moment.
No.
No, more coming?
Something is coming.
Something is coming there?
Sorry
for
many
many
questions.
Not at all. Thank you very much. Very good questions, Alena. Very good. At the moment, I see a question from Giovanni coming up. Okay, let's see. Do we have questions from you? Okay,
Oscar,
thank you.
Oscar,
Thank you, Giovanni. You're welcome,
Johanna,
most welcome. Very good question.
I don't know whether we should raise it here. On the recommendation side,
Yes.
I was saying in the very beginning that I really buy into the 5 bold recommendations. Then, of course, you have received feedback from management on these recommendations. And then there is this evaluation committee coming up soon, where IFAD management will also talk to our members, to the membership, and they will definitely debate on the way forward following these recommendations. I have one point mainly, and this is on the second recommendation. Yes, and I said so before. IFAD World Finance Policy definitely requires an update, exactly following the line of your justification. But then you say we should also prepare a corporate strategy, which and sometimes there's a thin line between the policies and strategies. Isn't it more appropriate to have something like an action plan attached to the updated rural finance policy rather than a corporate strategy? Also, I mean, in terms of the efforts required to get a corporate strategy endorsed, as compared to an action plan, I think this would be the more pragmatic way forward.
Thank you, Michael. Indeed, yesterday the evaluation committee took place and discussed at length the synthesis report on financial services, and that was precisely the line of argument presented by IFAD management, the importance of having an action plan. And we recognize the stretch capacity that they are facing now at headquarters in terms of preparing a new overall framework. But I think we should not underestimate the first recommendation, because without a proper stock take of what is going on at the country level that goes beyond what a synthesis report, because as Johanna has expressed, the synthesis is based on already existing evaluative evidence, this action plan will not be very well informed. Just as an illustration, you have mentioned in some of the examples the utilization of subsidized loans and the extensive use still of matching grants as another ways of subsidies. And we have not seen yet what are the results in terms of strengthening healthy financial markets. Because, as you know, subsidies can be useful if they work for a limited time and they are like a boost for certain services to reach important sectors of the population. But how are we really interacting in those markets is still a question that requires more empirical approach in order to orient this type of strategies or frameworks. We really think that the importance of the rural finance components will continue to be critical for IFAD operations, and therefore the umbrella, the conceptual umbrella to orient how to adapt this provision of services for more effective operations requires further attention. And I think there was a consensus among member states who were participating in the evaluation committee that such a thing could be very useful, be it in the form of a corporate strategy or in the form of an updated action plan, but a more overall umbrella that orient the practice that is taking place at country level would be necessary.
Mm. Okay, yes, thank you, Oscar, very much. I mean, I can just add the rationale for having both a policy and a strategy. Means the policy sets out certain principles only, yeah. Mm-hmm. But at the moment, and especially at this in the situation where IFAD is now in a very kind of thorough reform, I think there needs to be some strategic thinking on how this policy will be taken forward and put into practice across all regions. And we are, while we appreciate the diversity of practices coming from the region and we encourage it, there needs to be some commonalities also, some common, common principles and general principles on it. And that's why there needs, as Oscar just mentioned, an umbrella of a strategic nature. So how can we take this forward? So that was the main reason for having the recommendation.
Yes, I can follow the logic. I just wonder.
Is that clear, Michael?
Being in the periphery, being the head of the rural finance team, I have even missed the point that the evaluation committee has already taken part. I thought it's only coming up within the next few days. So, of course, I'm very interested in hearing more details, getting more details of what has been discussed and what has been agreed. And, of course, then we will move on. But we have to take into consideration the current staff situation. I don't know who should do all this. With all, I mean, the support I can give you on the recommendations, absolutely the regional stock take, etc., etc. I don't need to repeat your recommendations. I'm entirely with you. It's only the question of human resources. Who should do it?
Exactly. I mean, you have our full understanding and sympathy on that, Michael. We come to the end of our time now. I would like to hand over to Oscar again for a closing and quick wrap-up and closing of this seminar.
Thank you very much. I just want to thank the team who organized this event. It's a great initiative to share the findings of this synthesis report more widely. We had a great deal of participation through the online. I want to thank the colleagues who have joined from different country offices, other Rome-based agency organizations, and all of you. We hope that with this type of events will really help not just for the accountability purpose of the evaluation function, but also for the learning. And with that, I want to thank all of you for your participation.
Goodbye. It was a great pleasure.